Okay, so wow, these financial results from Dr. Reddy's are quite a lot to unpack, right? I mean, where do we even start?
Absolutely. It's a lot of data, but I think we should start with, the big picture, like their overall revenue growth. It looks like they've seen a pretty significant jump, especially year over year, which is impressive.
Right. So the consolidated revenue for the quarter is up 16% year over year. That's like a solid increase, isn't it? But there's also mention of a recent acquisition affecting these figures, right?
Exactly. They acquired the nicotine replacement therapy business from Haleon, and that's contributing a significant portion of the increase, almost 6 billion rupees actually. If you exclude that, the underlying growth is more like 745%, which is still pretty good, but it shows the impact of that big move.
Okay, so it's like they bought a whole new business line and that's boosting their numbers. It's kind of like adding a new wing to a house, isn't it?
Yeah, it's a great analogy. It's not just organic growth, there's a new component to the business now. And that acquisition, the NRT business, it also impacted their profit before tax, which includes around 1.2 billion from the new division.
So it's not just the top line revenue, but also the bottom line that's getting a lift. That's something to keep an eye on, I guess. I wonder how that's broken down across their different segments.
Well, the global generic segment is a big player. I mean, as always, it seems to be driving a lot of the revenue, showing a 17% year over year growth. Within that, the newly acquired NRT business is obviously a chunk of that in Europe, which makes it a little tricky to compare to previous quarters.
Right. It's like trying to compare apples and oranges a little bit when you have a completely new fruit in the mix, so to speak.
Yeah. And speaking of Europe, that segment shows a massive jump, 143% growth compared to last year. Wow. But that's mostly because of the addition of the NRT portfolio. Excluding that, the underlying growth in Europe is around 22%, still very notable.
Okay, so the NRT acquisition was especially impactful in Europe, I see. What about their more established markets like North America, for example?
Well, North America is actually showing a more modest growth of only 1% year over year in revenue for the quarter. They've got a few new product launches helping, but they're also seeing price erosion, which, can impact growth figures.
So it's not always smooth sailing, even in the big markets. It's like sometimes you gain some ground and then lose a little too. It's a constant push and pull, I guess.
Exactly. And I mean, that's the game, right? They did launch 4 new products in North America this quarter. So that's the kind of move they have to keep doing to sustain growth in competitive markets.
Right. They have to keep innovating, not just coasting, I guess. So, what other regions are showing notable growth for them?
Well, India and emerging markets are both showing double digit growth, which is really good. India is up by 14% for the quarter, and emerging markets are up 12% due to market share expansion and new products. So these are definitely key growth areas for them.
That's encouraging. It shows they're not just relying on established markets, right? They're expanding their footprint, like in new territories, so to speak.
Yes, and the pharmaceutical services and active ingredient segment, that's also showing growth. It's up by 5% in this quarter. But a little less momentum in the service business, they say.
Gotcha. So it's a mixed bag. Some segments are doing better than others. It's like a well balanced portfolio is like having a diverse diet, right?
Absolutely. It's not relying on just one source of growth, which is a good strategy. The press release actually highlights some key launches in India, like toripalimab, which is a cancer drug, and ilubixabat for chronic constipation. It's important for them to keep bringing new stuff to the market.
Yeah, that's the kind of news that patients are always looking for, the innovative treatments and new options. So, what about the financials? Aside from the revenue, how are their expenses looking?
Well, their selling general and administrative expenses, or SG&A, have increased by 19% for the quarter and 23% year over year. That's a significant jump. They attribute that to the NRT business costs and investment in sales and marketing. So this seems like a strategic investment in growth, essentially.
I see. They're spending more to earn more, kind of like planting seeds, hoping for a good harvest.
Exactly. They are investing in their brand, which I think is a smart move with the new acquisition. And their R&D expenses are also up about 8% of their revenue, which is good. It means they're continuously developing new products.
Yeah, that continuous innovation is what they need to stay competitive. So, all this spending, is it impacting their bottom line significantly?
Well, their profit before tax is up 3% compared to last year for the quarter, but down slightly by 2% sequentially compared to the last quarter. So through recent acquisition has definitely skewed things.
Yeah, it makes it a little harder to see the underlying trend. It's kind of like trying to judge the speed of a car when it just got a big push from behind.
I guess, but overall, the profit attributable to equity holders is up by 2% year over year for the quarter. So they're still, showing growth there too. But when you look at the 9 months picture, it's a slight decline of 5% year on year.
Okay, so short-term gains and longer-term adjustments. I mean, that's what I'm gathering from this, right?
Right. And there's a few one-off items that have impacted the results, like the impairment of a product intangible. That's a hit of 907 million rupees for a generic product due to procurement issues. It can happen when you rely on contract manufacturers.
Oh, right. So it's not always within their control. Sometimes there are external factors impacting things. It's like a cook relying on a certain vendor, and the vendor has supply issues.
Exactly. Also, they've had to write off a deferred tax asset due to a change in tax laws, which is a little bit complex, but it is what it is.
Okay, I think I get it. So these are more like adjustments than poor performance. Is that right?
Yeah. And also, it's important to look at their earnings per share or EPS. For the quarter, it's 1694 rupees diluted. So that's quite a jump from the last year, in part due to the stock split, where each share of 5 rupees was split into 5 shares of 1 rupee each.
Okay, so the stock split makes the per share numbers look different. It's like resplicing a pie into more pieces. It doesn't actually change the size of the pie itself.
Exactly. And that also helps explain why the figures are different compared to previous quarters. So it's something to keep in mind. They did this stock split to increase liquidity for the stocks, making it more accessible for a larger pool of investors.
Right. It's like making smaller pills more readily available. So, looking at the balance sheet, any interesting tidbits, or is it all pretty standard?
Well, their cash and cash equivalents are relatively stable. They've also made significant investments in acquiring the NRT business, which you can see reflected in the increase in goodwill and other intangible assets on the books.
I see. So it's all about the investment in the new business, I guess, really. It's like you have to spend money to make money, right?
Yeah, and actually, they've entered into a voluntary licensing agreement with Gilead Sciences to manufacture and sell HIV treatment drugs in a lot of countries, which is also quite a significant move for their global reach.
That's a huge step in expanding access to needed medicine and is a big win for patients. It's like they're not just focused on profit, but also on making a real difference.
Absolutely. And they've got promising results from phase 1 trials for a new cancer therapy, which is excellent news. So, all in all, this feels like a quarter of both significant changes and some solid progress. And
yeah, it's like they're laying the foundation for future growth, even if there are some short term adjustments. Before we wrap up, I think we should quickly remind our listeners, if you like this analysis and want to hear more, make sure to hit that like button, share this with anyone who might find it interesting, and of course, subscribe to the channel.
right, definitely do that. And it's interesting how they are managing all the complexities from their acquisitions and compliance issues, like the ongoing investigation in Ukraine. That's a lot to juggle.
Yeah, it's like they're sailing through some turbulent waters while also charting a new course. It'll be interesting to see how they navigate all of it in the coming quarters, isn't it?
Definitely. I mean, they're doing a lot of things: new product launches, acquisitions, and navigating geopolitical uncertainties. It's a lot to keep track of. It's going to be exciting to see where they go from here.
Absolutely. So, as a final thought, what would be your key takeaway for investors from all this?
I'd say they're definitely in a growth phase, making strategic moves that could lead to significant long term gains, although they are having to adjust for the costs and complications in the short term, especially relating to the big acquisitions they have made recently.
Okay, that's a great summary. Thanks for breaking it all down for us. It's certainly a lot clearer now.
No problem at all. It's always fascinating to see how these companies are performing and what's driving their results.
Definitely. And I guess we'll have to wait for the next quarter to see how all of these changes play out. So until next time.
Right. See you then.